Good afternoon, everybody. Thanks for attending. This is Chris Gross. I'm going to be sitting in for Tim Harding today, who's away on a business trip. I know I can't hold a candle to Tim with these webinars, but I'm going to do my best. And what we're going to talk about today is it's an overview of everything we do, all the frequently asked questions we get. The title is Keys to the Kingdom. It was one of the most popular webinars we ever did a couple years ago. And this is part two. We've learned a lot over the last 4 years about where these products fit, what interest can be expected, the best ways to sell these. So today we're going to cover the who, what, where, when, why, and how of MLCDs. Today's going to be, we are recording this webinar, and we are going to use it for training purposes going forward. So we are not going to take any questions today, but there will be a forum for you to contact your business consultant when we're done. So in that interest, let's get started, and hopefully this will be helpful to everybody, new agents, experienced agents. It'll be a refresher in a lot of the things. And with that, let's get rolling. All right, the first question, who? We're not talking about the English rock band, The Who, but more importantly, some who's that have to do with our business. First of all, who is Alternative Design? Alternative Design has been around since 2009. Most of us come from a background of working with either market-linked CDs or insurance products. And we decided some of the partners here had been selling market-linked CDs to pensions and other institutions for many years, and we decided it was time to bring this to the retail market. So that's who we are. Most of you already know that. More importantly, who are MLCDs right for? What types of clients could benefit from MLCDs? More importantly, for you guys, who should you be selling MLCDs to? Based on my experience, MLCDs can be a part of any investor's portfolio. Let's take a look at a few different types of investors. High net worth investor already has made their money. They're looking to protect their principal and potentially get a reasonable rate of return. That fits a lot of your clientele, and these products originally were developed for the high net worth clients of private banks. Therefore, this is a product that can benefit your high net worth investors. Who else are they right for? We know a lot of the agents out there sell a lot of annuities. Annuities are wonderful. The problem is they're not always a fit. When aren't they a fit? The client's too young. They're in their 40s. They really are not going to be able to hold the funds there until they're 59 and a half. So first of all, who should you be selling MLCDs to? When the client is too young for an annuity to fit, this is the next best thing. It is also principal protected. It also offers a lot of the benefits of annuities, minimum guaranteed returns, which currently range from 50 basis points to 150 annually, and we'll talk about some of the benefits later. We see a ton of cases from clients who are too old for annuities. Yes, the insurance companies will write the case for you. Of course, they're going to reduce your commissions dramatically. In some cases, the client's too old. They're in the wrong state. These products are great. We had an agent last month who submitted an application on a 103-year-old client. Some may say, why would the 103-year-old buy a 7-year product? The reason is there's nothing else out there that can offer the principal protection, FDIC insurance, minimum guaranteed return of 0.5, 1%, or 150, depending on the product, and the potential, this is the most important thing, to receive a reasonable rate of return. I know a lot of those out there have clients who buy traditional CDs. We know the rates have been very low over the last 4 or 5 years. And what the clients keep doing is they keep rolling the CDs over for another year, hoping that rates will move higher. The sad fact is rates have moved higher. Long and medium-term interest rates are up over 100% in the last year. However, traditional CD rates have not really moved. How come? The banks don't need the money, especially for 1 year. So a much better option, by the way, if you have a client who is buying CDs that pay less than 2%, it is about the worst investment somebody can make right now. Why? Inflation is running at about 2%, and the CD they're buying, let's say it pays 1%, that's before taxes. So that client just guaranteed that they are going to lose money, quotes around that, after taxes and inflation. With an MLCD, they can get the same minimum guarantee they're getting in the traditional CD, plus the potential for much more. That moves to the next question: who is buying MLCDs? Last year, 2013, was a record year for these products. There's something like 30 billion issued in the United States alone. And who is buying them? Mainly that was retail investors. Investors with anywhere from $10,000 to $999,000 to put into MLCDs. A lot of institutions are also buying them. We have multiple trust companies who buy CDs for their pooled trust accounts each month. Pension funds. Basically, the answer is there's so many being sold now. I believe last year was the second year in a row that MLCD sales were a little bit greater than index annuity sales. So the answer is everybody's buying them. And if you're not showing them to your clients, somebody else probably will. One of the questions we get a lot: what issuers do you guys actually work with? Because we only offer certain issuers each month. Currently, our issuers that we have selling agreements with and we look at products from are Bank of the West, Barclays, Goldman Sachs, JP Morgan, HSBC, and Union Bank. So we have 6 issuers available. I generally look at anywhere from 30 to 50 products a month to pick the 4 or 5 products that we put on our product grid. And what we're trying to do with our product grid, we're trying to put products out there that make sense for both you, the agent, your client, and us, Alternative Design. Sometimes that is not always every product that we see. So the things we really look for are, the reason a lot of our products are longer term is we know that the commissions in these products are lower than what you're used to receiving on insurance products. However, we try to get the most commission to you as possible. Right now, those are with the 7- and 8-year products. I do, as many of you know, I do have other products, shorter term, linked to other stuff, and also different issuers available each month if you have a specific need. The only thing we ask is, for us to put a product on the platform that isn't, we need to get at least 100,000. So if you have a client that is interested in a product you don't see and they have at least 100,000, or you can raise 100, we'll be happy to offer it to you. And finally, on the who should I speak with at Alternative Design? When you have questions, especially after this webinar, your first point of contact should be your business consultant. At the end of the webinar, I'm going to put up all the business consultants. We've had a few guys retire recently, and we've added some new folks who, if you haven't spoken with if you have a new business consultant, if you haven't spoken with them yet, we know you're going to be pleasantly surprised. Our new guys are hungry, they are educated, they are passionate, and we believe you'll really enjoy working with them. So who should I speak with? Most things get directed first to your business consultant. Your business consultant will then let you know if you need to speak with me about a case, if you need to speak with Judy about commissions, if you need to speak with Lance about something, if you need to speak with Tim about marketing, if you need to call Provident Trust. Always start with your business consultant. If you can't find something on the webinar, on the agent portal, call your business consultant. If you need a marketing idea, call your business consultant. That's what they're there for. And at the end, I'm going to share everybody's phone numbers and contact info. All right. Next thing we're going to talk about is what? A couple of my favorite whats from Good Times. We got What You Talking About, Willis. And from Mad Magazine, What Me Worry, Alfred E. Newman. Just a little levity to brighten up the day. All right, let's move into what. What will MLCDs do for my business? If you don't remember anything else from this webinar, this is the most important thing. This is what we call our buy-in. That's what we're here for. We're here to help your business grow. If you have an existing business, we're here to help you make more money without seeing more people. We have an additional product for you to offer, and more importantly, we've talked to many agents who began offering MLCDs a year ago, 2 years ago. Those agents, most of them, if they did, the simple things we tell them, 4 questions and showing the products, they had their best years ever. They wrote MLCDs, but they also, more importantly for most of our agents, wrote more annuities and life insurance than they ever have before. How come? We know the truth. A lot of agents use the MLCDs to get the client into their office, and then once the client is there, you can show them multiple things. You can show them the Market Link CD. You can show them an annuity. You can show them life insurance, single premium life. We do offer many of these products now. We know a lot of you have FMO relationships. You offer them through them. That's fine. We just want you to know that it is so much easier to sell 3 products to 1 client than to sell 1 product to 3 clients. So a lot of the agents out there are already diversified in their business. Those of you who are, more one-trick ponies, you sell a lot of annuities, a lot of life insurance, it's great to have a focus. It's the only way to be in this business, but you are a lot of times walking away from additional revenue by only offering one of those products. And we'll talk about a little bit later, when to present the MLCD, all that stuff. Next, most important question, many of you know, what is the commission? The commissions on these products, we know they're fairly lean. They've come up a little bit recently. We've also done some things to get more comp to the agent. Basically right now, our commissions are either $175 for a 6.5-year product, $2.25 for 7-year products, and I believe $275 for our 8-year CDs. Doesn't sound like much, but keep in mind, and by the way, we have a new business consultant here who's also a producer. One of the things we're trying to do is bring some real stories from the field. And when he looked at our commission schedule, he said, that's wonderful. We said, well, what are you used to getting 7% on your annuities? He goes, yeah, but the way I look at this is I can most likely get paid 3 times on this money. How does that happen? Well, let's say you bought a 7-year product. You got 2.25 the first year. Most of our CDs in the second half of the term revert back to par or greater. Therefore, there's a very good chance that you can exchange that CD for a new one. So let's just say that took 5, 6, 7 years. CD's doing great, and the second and third year the second and third payments, by the way, are going to be on larger sums of money as these have grown. So let's say you bought a CD, a 7-year CD, you got 2.25. After 5 years, that CD has paid really nice interest, and it's now at a premium. We're going to let you know this. We're going to advise you that your client can sell it, walk away. You can put the money into an annuity, life insurance, or we're going to make it real easy for you. A lot of agents have already been through this. We're going to propose an exchange where the client with 2 signatures sells the existing CDs. They can either take the gain or reinvest the whole amount, and they're gonna buy some new CDs, which hopefully at the time will have some better terms. You're again going to make a commission. So that's after 5, 6, or 7 years. You're now at $450 comp, and then what happens? You're potentially going to do that again 5 to 7 years later. So in that 10 to 12 to 15 year period, you've received the same commissions you're going to get on an annuity. We know that's a long game. We know a lot of us can't wait to receive the commissions but if you have a long outlook on this, you'll realize that the commissions will continue to be paid on this product. While it is locked up for a time frame, these are liquid, and generally in the second half of the term, boom, you have the opportunity to sell it and move the money or buy new CDs, generate another commission. And finally, of course, that third commission that we're talking about 10, 12, 15 years down the road, that may even be double what the first one was because the assets have grown. Okay, so most importantly to us, we love to do a great job for your clients, but our clients are you guys, the agents. So questions 1 and 2, those are agent focused. More importantly for all of us, client questions. What are the benefits to my clients? I like to use a lot of analogies, and I'm a big basketball fan. I lived in Miami for years. I'm a big Heat fan, and you know, there's some great players out there, Kevin Durant, Chris Paul, but most people can argue the best player in the world right now is LeBron James. Now, why is he so good? Because he's really good at everything. He's not the best shooter. He's not the best rebounder, not the best passer, block shots, dribble, but he's really good at everything. MLCDs are the same way. You can find a product with a higher bonus, better liquidity, better returns, you know, but you're not going to find any product that offers what we call the 4 essentials. Principal protected, minimum guaranteed return, variable interest, the potential for up to 8% on some of our products, and finally, FDIC insurance. I might have said that one twice, sorry. So this is the only product that offers safety plus the potential for a reasonable rate of return in addition to FDIC insurance. I like to use a test with clients when they come in and they show me a product that they're thinking about buying. I like to always say, okay, let's take a look at it. You're thinking about buying a traditional CD. All right, let's talk about it. Principal protected, yes, check the box. FDIC insured, yes, check the box. Guaranteed interest, yes, check the box. The potential for returns that outpace inflation, no. Forget that product. It doesn't pass the smell test. They want to buy a mutual fund. Great. Is it guaranteed, principal protected? No. Is it FDIC insured? No. Does it offer minimum interest? No. Does it offer the potential for returns that outpace inflation? Yes. But are you willing to take the other 3 risks to get to that place? So that's the easiest way to explain this to a client. You can do this with any product. You can change your test a little bit. It can be principal protected, liquidity, and minimum guarantee. Boom. Finally, the benefits to your client. The fees in these products are really low. There is no fee charged to the client initially. All compensation is paid to the agent by the issuing bank. The banks put a discount on the products. They always revert to par, though. So what that means, if your client puts $100,000 in and they hold it to maturity, they're going to receive $100,000 back plus interest. It's not $100,000 minus the commission that you were paid. Boom. All right. Finally, a couple more questions on what. When my clients buy a CD, what will they receive? These are common questions that we go through all the time. First of all, when they open the account, they will, if they put their email address on the account, it's very important going forward that if your client has email, you put it on the account, because what happens when they open it, they will receive a welcome letter from Provident a couple days after the account is open. Sometimes this stems some questions. That's okay. At least the client knows that without you having to be involved, that my account was open, my check has been deposited, my money is where it's supposed to be. If they don't have an email address on their account, it's okay. Provident will normally send out the welcome letter at the same time they send the confirmation, which I'm going to talk about in a second. So what happens then? The CDs let's say you deposited, let's say you wrote an application today, you overnighted the check to Provident, they get it tomorrow, March 13th. What's going to happen? They're going to deposit that into an FDIC-insured interest-bearing account, and that money is going to get some interest over the next 2 to 3 weeks until the money is sent to the issuing bank. It's not going to be much, but at least the client knows that, you know, I pulled my money out of my bank account. The day the check was deposited, I stopped receiving interest on that account. I started receiving some from Provident, and generally that interest is credited to the account once a month. But as you see, the only interest they'll normally receive from Provident is in the first couple weeks after you wrote the case, but before the settlement date. So it's generally a 2 to 3 week period. And then when interest is paid in the account, which we'll talk about in a second, they will also receive some small interest from Provident while that money is there. They, of course, can take the interest at any time once it's been credited to the account. And while we're talking about interest, one of the most important questions is, what interest shall my client expect? Initially, and we want to apologize, I think a lot of agents run under the impression that the interest that would be paid each year would be close to the cap. That's not reasonable. If that was reasonable, if interest each year was going to be, if the cap is 7 and interest is going to be 6, no offense, but we probably wouldn't be talking to any of you. We'd be out buying these things for ourselves, because a guaranteed product that pays close to 6 to 7% interest each year, it does not exist right now. And if you make it sound too good to be true to the client, it's only going to lead to heartache. The truth on these products is pretty good. Our Goldman Sachs product, for example, it's a CD that's going to pay interest between $150 and $550 each year, when traditional CDs are generally paying about 1% each year. That's a good story. If it was just the $150, it might be a good story, but it's not. It also has the potential to receive higher interest. So how is interest shaken out? We've now been offering MarketLink CDs on a monthly basis since July 2010. I apologize. And to date, we've had about 160 CDs that have made one or more interest payment. The returns have been good. Our average return, and keep in mind that MarketLink CDs generally pay higher interest in later years. I'm going to discuss that a little bit later, why that is. Our average return to date has been 1.37%. Our average first-year interest has been right around 1%. Our average second-year interest is about 150, and then our average third-year interest is well over 5%. That's how these products really should be sold. You should explain to the client, this product, the goal of this product is to outperform traditional CDs by about 100 points over the 7 or 8 year term. It may not happen year 1, may not happen year 2, but over time you're going to be very happy with these products. That is how these have shaken out, and obviously as we get, you know, our oldest CD has not even made its 4th year payment yet. So as we get more mature and our CDs have more time to grow, those numbers are going to increase dramatically. But we like to put them out, and those numbers are posted on our portal each month, generally by the 15th of the month, which will reflect last month's interest payments as well as the performance. Long and short of it is, you should let the client know that your goal in buying this is to outperform a traditional CD, and they really need to sometimes exercise some patience. Also, we no longer offer any products that don't pay a minimum guarantee, or the index-linked ones that pay at maturity. Initially, the first couple of years, a lot of our products did not have minimum guarantees. That was because those products didn't exist at that time because rates were so low. Now, as you see, the minimum guarantees, they range from 50 basis points to 150 basis points a year, so that will also bump up the numbers over time. Where? All right. Where is Alternative Design? Question we get all the time. We're based in San Diego. I think we're now up. We have 11 folks here. We're on the phone all the time. And if you want to come see us, we're happy to have you in. Where is Provident Trust? Provident Trust is located in Las Vegas, and they're a full-service trust company. Currently, they have, I believe, over 11,000 clients, and I believe the asset base is now up to about $4 billion. Provident is a non-depository trust company, so when your client writes a check to Provident, it is not deposited at Provident. It's deposited in Provident's client accounts at Citizens Business Bank. So if it is deposited into an FDIC insured account, the client's money is FDIC insured at all times, and that takes me to number 3. When the money is deposited, where does it go? It goes into Provident's account at Citizens Business Bank until settlement date, which is generally 3 days after our monthly deadline. That's when the money is sent by Provident to the issuing banks, and the banks have the money at that point until they pay interest. Then some money comes back to Provident. All right, where? Most importantly, where can I find everything? Offerings, final disclosures, interest information, marketing materials. The first place, once again, is always call your business consultant if you have questions where stuff is, but we try to post as much stuff as we can on our agent portal. On the agent portal, you can generally find preliminary disclosures, term sheets, product grid, offering guide, other point-of-sale items, and then most importantly, this is where we post all the interest information. You don't need to call us or call Provident Trust to find this stuff out. It's posted on our portal. Generally, it's posted on the 15th of the month, so we should have everything up there. The interest information for February should all be up on the portal by this Friday, which would be the 14th. Those include performance updates, performance summary that I talked about showing our total performance. And if you don't know what CDs your client owns, because they're all shown by CUSIP numbers, you can just call your business consultant. They have all that information on their database. They can show you which ones the client owns. They can show you how to download them. So where do you find everything? Our agent portal. And if you either can't get on the portal or have questions, contact your business consultant. I'll provide everyone's names at the end. All right, let's move on to when. When do the offerings and other documents come out? Generally, we receive most of our offerings on the 1st of the month, the first business day of the month. That sometimes falls on the 1st. It sometimes falls on the 4th. No, it wouldn't fall on the 4th. Sometimes falls on the 3rd. We get them from the banks. We like to take a look at all the banks' offerings before we send something out. A few of the banks generally send them out on the 2nd business day. So we try to get stuff to you as soon as we receive it from the banks. On most of our emails, we will set a date that we believe things are coming out. If they're not out or not up on the portal, it doesn't mean anything's wrong. It just means we didn't get them from the banks. This is more common with the final disclosures. Sometimes the banks don't deliver those to us until the 1st of the following month. As soon as we get them, we like to get them all. We'll put them up on the portal. If you ever have questions or can't find anything and you think it's within the time frame it should have been up there, once again, contact your business consultant. All right, the most important when question is, when are the monthly deadlines, and what do those actually mean? The monthly deadlines are set by the banks. They're generally between the 24th and the 27th of the month. And when we send out our offerings, we generally send out an email. It's also on our product grid. It'll show you the deadlines. Now, what does the deadline actually mean? Does that mean the money has to be at Provident? Does it mean the truth is, on the deadlines, first of all, we would like all the money to be at Provident 1 to 2 days before the monthly deadline. There are exceptions to that. The reason is, if we have 150 agents that are sending in cases on the last day, there's just human interaction involved there. Provident needs to open the packages, get all the account numbers together. The sooner you can get it in, the better. However, we know that is not always the case. So we are fairly flexible. The deadline What the deadline means is that if the deadline is Monday, March 24th at 10 a.m. Pacific time, what that means is within an hour of that time, generally by 11 a.m., we need to place the order with the bank. There is no going back on that order. When we tell them to buy $15 million of a certain CUSIP, we now own that product. There's no, we were kidding, the client changed the amount of the check. So if you have a case that you want to submit close to a deadline, please be 100% sure that the client knows what they're buying, they're fully into it, they've filled out the application, they've written you a check, and know that there is no going back. So if you tell me, listen, I've known this client for 20 years, they wrote me a check this morning for $100,000, they're good to go, and I say, fine, this case is approved, overnight it to Provident, then when the check gets to Provident, the client had changed it from $100,000 to $50,000, that's a big problem. Usually what we do in those situations, we buy them and hold them ourselves, but we don't like it, and it's really something of last resort. So if we're going to continue to be flexible on deadlines, we need help from you, the agents, to try to get stuff in as early as possible. If you're at or near within 1 day of a deadline, be very clear before you send it in that this is going to be March business, or it's okay if we move it to April. Usually the products are very similar, most of you know, from month to month. So that's the real God's honest truth on the deadlines, that the funds, we want them at Provident, but we understand and we will make exceptions, but we really need help from you, the agent. All right. Important question that comes up all the time. When should I, the agent, or my client contact Provident or Alternative Design? Normally, there's a real easy rule. If there is a question about the account, my beneficiaries, who are they? What's the address you have on file? When was my 1099 sent? Those questions should be directed to Provident. It's going to be more efficient doing it that way. You're going to most likely get the correct answer. Provident's phone number is 888-855-9856. And if you have submitted an agent authorization, you can call on behalf of the client for most things. So when it is a account-related question, you should call Provident. When it is something to do with the investment in the account, my client wants to know what the interest was. I can't find it on the portal. You're going to call ADIS. You're going to call your business consultant. My client is interested in liquidating the CDs. They need cash. In that case, the agent or client could call either Provident or ADIS. Sometimes it makes the most sense to call us first. If you don't know who to call your business consultant. They will be able to point you in the right direction. If you don't have an agent authorization submitted, your business consultant can get one for you. And if you don't have one submitted, please don't call Provident, because it's just going to come right back and they're going to ask for it. So you can call us and we can try to help you out with anything. Once again, if you have a product question, call ADIS. If you have an account question, generally call Provident. Finally, if you ever have any issues, you or the client, with someone at Provident, which happens from time to time, let your business consultant know. And some of you that had those issues, we take them seriously and we try to take care of them, make sure the client is taken care of. And by the way, 90% of the questions we get, my client never received a statement. We understand. Usually the answer is either they did receive it, they didn't know what they were looking at, or their address was wrong. That's something we could just call Provident immediately, you or the client, and figure it out. Provident's telephone number again for my buddy Jeff is 888-855-9856, and Alternative Design's number, if you want to reach us, is 858-201-4200, I believe. I have it on the end. All right, finally, another when question. When is interest paid and reported? This is the most common question. Most of our CDs, they calculate interest on the anniversary date. The interest is then paid by the bank 3 days later. Now, it's paid by the bank, the issuer. It's paid via DTC, an electronic system. So the bank pays it 3 days later. That doesn't mean Provident gets it 3 days later. Why am I bringing this up? A lot of times we have agents that call up on the 28th and say, oh my God, I can't believe no one's told me what the interest is yet. It was paid 3 hours ago. We have about 15 CDs a month to pay interest. It does take some time to sort through everything. What we try to do is the interest, so let's say the interest is calculated on, we'll take February for example. It was calculated on the 25th. It was paid by the bank on Friday the 28th. It arrived at Provident on Monday, March 3rd. So you already see now there's an 8-day gap between when it was calculated and when Provident even received it, that we need some time to report it out to the client. So what we do, ADIS, Provident, where the interest is paid, it's usually correct. We double check everything. We credit it to the client's accounts as soon as possible. Generally by the 5th of the following month, the interest is credited to the client's account. So if the client is really dying to find out what the interest was, the best thing to do would be to tell them to call Provident. Generally by the 5th, always by the 10th of the month, call Provident. They can tell you what interest has been credited to your account. What else do we do about interest? We then, when we receive the performance updates from the banks, which generally are by the first or second Friday of the month, generally by the 10th, I actually received them all yesterday. We then post them on our agent portal, and we then send them to Provident with a list of all the clients who should receive what performance updates. Provident then mails out an interest package to every client that had interest declared, whether they received it or not. It will have the performance updates in there from the banks. We'll also have an updated statement, which they can hopefully figure out what their interest was, and it also has a letter letting them know that should they have questions, they can call Provident or their agent. So long and short is, the interest is generally paid right around the 1st of the month. It hits Provident. It's credited to the client accounts 1 or 2 days later, and all that information is disseminated on our website and sent out to the clients by the 15th. There's about a 2-week period in there where everything's in flux. The easiest thing to do is for the client to call Provident between the 5th and the 10th of the month after, and they should have the interest in the account already. Next question. What will my client receive from Provident? 1099s, RMDs. Provident only mails stuff to your clients when there's a need. So they don't send out marketing stuff. They're not sending out product ideas. 1099s are sent. 1099 interests are sent in January of the year after. So they were sent out this January. Worst case was early February. 1099Bs for clients who sold CDs are generally sent out about 2 weeks later. Provident mails out RMD information in February. So for 2014 RMDs, the client should have received their calculation letters this past February, a couple weeks ago. Provident only sends out, on all IRAs, Provident is required to send out a year-end statement. This sometimes creates a lot of confusion because the client, let's say a client bought CDs in their IRA in March 2014. And Provident's required to send out a year-end statement in January 15. This client has not even had the opportunity to receive interest yet. So what it's going to say on there is your interest paid for last year was 7 cents. And the client gets furious. They think the CDs aren't working well. The reality is the CD hasn't paid interest yet. The 7 cents was paid for the one day that the money was at Provident before it was sent to the issuing bank. So a lot of these questions, if you have a better idea of what Provident's sending, they're going to send out the interest package when interest is received or paid. They're going to send out a year-end statement to IRAs. They're going to send out RMD information. Generally, the client shouldn't receive anything else from Provident. All right. Next question is why. With the Olympics just ending, I wanted to give a tribute to Nancy Kerrigan, who had the most famous why ever. Why does ADIS focus on MLCDs? This is a question we get all the time. Once again, the same reasons. We've found a lot of clients are looking for those four essentials. Many of our institutional clients are required to buy FDIC insured products. That's why originally we focused on it. But we feel as a company, MLCDs of all the products out there available they're kind of the Toyota of insurance products. If you don't know who's coming into your auto showcase, a Toyota Camry appeals to everybody. It's pretty good at everything. You might have some client that wants a faster car. Great, you can show them a Porsche. That's kind of your stocks and bonds. These products, we feel they have the greatest appeal. And once again, think back LeBron James. Not the best at anything, but the MVP because he's pretty good at everything. More importantly, why should you, the agent, offer MLCDs? We have this discussion all the time with agents. The reality is there's depending who you're believing, there's trillions of dollars of investable assets out there. Most of that money is sitting in banks. Only 20% of all retail investable dollars are in insurance products. Maybe that will bump up to 25 if you guys work real hard. But the reality is if you're only talking to people about insurance, you can almost be guaranteed that client is doing 80% of their business with somebody else. It is that simple. If we know that clients are not suitability-wise, they can't put all their money into insurance products. The insurance companies don't allow it anymore, nor should they. They're great products. It's not right for all of anyone's money. So most importantly, if you want to do the math, think about it this way. Okay, let's say you're getting 8% on an annuity and you put 20% of the client's assets into the annuity. And let's say we're paying you 2% on the CD and you put 80% of the client's assets into a CD. You just doubled your revenue with that same client. It is truthfully that simple. Obviously, those numbers can be skewed. Some clients might have more money in this, more money in that. But if you present yourself as somebody who can offer multiple products, FDIC insurance, annuities, life insurance, boom. You then capture more of the client's dollars, and you're generally, our average case size on MLCDs generally runs about $60,000 to $80,000. Where back when all we did was annuities, our average case size was generally $30,000 to $40,000. You're getting more of their investable dollars. People put their real money in the bank. They don't put it into stocks. They don't put it into mutual funds. They don't put it into annuities. Their real money is at the bank. And if you're only offering insurance products, you're leaving 80% of that business for somebody else. All right. Why should my clients purchase MLCDs? I know we've covered this a little bit, but I simply break this down as there's four main benefits for these products. One, principal protected if held to maturity. If you buy this, I guarantee I will return all your principal plus interest at the end of the term. There's a few products that can do that. That's not in itself the most important thing, but when you add it to the equation, it makes a great story. Secondly, FDIC insurance. People are not as concerned about this right now as they were 5 years ago. However, there's a lot of clients out there that are. So in the unlikely event that the issuing bank fails, the FDIC will return their original deposit, and in some cases the interest, if it's already been credited but hadn't been paid. Boom. So 1 and 2, why? Safety. 3 and 4, potential. So the products offer a minimum guaranteed return, like I said, that's equal to or better than what they can get in traditional CDs right now. Also, the most important thing is the variable interest. Variable interest linked to stocks, commodities, or indices. It gives them the opportunity to earn a reasonable rate of return that outpaces inflation. It is that simple. That's why they should purchase them. Next question we get a lot. Why does my client open an account of Provident Trust? The reason is these products, they're delivered to the client electronically through a system called DTC. DTC is common. It was used in $35 trillion of investment security purchases last year. It's the most commonly used electronic exchange. Provident is a DTC member firm. They have a DTC number. When you're part of a DTC member firm, the great thing is the interest follows you. So when the client buys a CD and opens an account at Provident, let's say for some reason 5 years later they wanted to transfer that to another DTC member firm, the interest follows them. So that's the main reason. Provident also provides the 1099, tax reporting, all that stuff. Another why we get all the time, I covered a little bit before, why do MLCDs normally pay greater interest in later years? Very simple answer. The crediting methods used on most of these products compare the initial price of the stock or commodity on the day you buy it to that price on the anniversary date to generate the interest. As most of you have seen, over time, the stocks that are up a lot generally stay up, and then potentially some stocks that got out of the gate a little bit slower. Commodities have been bad in the last couple of years. We're hoping that turns around soon. Gives them some time to perform. Most of the interest in these products is not paid in the first 2 years. The worst thing you can do is tell your client, this is a CD, you're going to get 5% the first year. Client comes in. Last month we had a really good month. We had one CD pay $8.75. We had one pay $4.25. Some of those clients were unhappy when I spoke to them. Why? Because my agent told me this is a CD that pays 8% and I only got 6%. That's not the product. And the problem wasn't the product. It was that either the agent didn't explain it properly. Most likely, though, the client heard what they wanted to hear. We know that most of you guys tell them the full story and they only hear what they want to hear. So it's real important at the end to explain to them, this is a great product for you for all the reasons I covered. I just want you to understand that if we get the minimum guaranteed return the first year, it doesn't mean that something's wrong. We still outperform what you're going to get in a traditional CD, and we now, in most cases, have the springboard to get greater interest in future years. All right, moving on to Hal. And we're not talking about Mr. Hal from Gilligan's Island. We're talking about how do I make more money without seeing more people? I think we beat that one to death. If you can offer market-linked CDs, you get to the clients big money. And once again, it's a lot easier to have one client that you sell 3 or 4 products to than 3 or 4 customers that you sell one product to. Make them your client. Show them additional stuff. The most common question we get is, how do I market these? Should I put an ad in the paper? Should I put flyers up at the... No. First thing you need to do is nothing different. Go out to that appointment today. Show them the annuity. Show them life insurance. If you sell something, great. On the way out, you're going to ask, by the way, Lance, do you own CDs? And then you go through our 4 questions. It's that simple. Let's say they didn't buy something. Say, oh, by the way, Lance, I know you didn't like the annuity. Do you own CDs? Boom. Work into the 4 questions. All of our business consultants can show you how to use these to either make the sale right there or set in a follow-up appointment. And what do I do to make these real simple? I get the client. I ask the 4 questions. They say, yeah, I want to see an FDIC insured CD that has the potential for 7.25%. How do you present them? Do you show them preliminary disclosures, term sheets, offering guide, product grid? All that stuff is great. All I use to sell is the product grid and the term sheets from the bank. The product grid tells the full story. The term sheets add a little weight to it. It lets them know you're really getting a product from Bank of the West or Barclays. How do I use the product grid? It's real simple. I show them, all right, we got 3 different issuers. We have Goldman Sachs, Bank of the West, Barclays, for example, JP Morgan. We have different products. Let me show you here. We have the maximum interest you can receive on this product. Let's take the Goldman Sachs product. Maximum interest you can receive over 8 years is 44%. That equates to 5.5% annually. The worst case you can do is 1.5% a year or 12% over the life of the CD. Are you okay with that number? No, you know what? I wish I could get some more. All right, are you okay with the 44%? Of course I am. Let me do you a favor. I'm going to cross both those out and let you know you're probably not going to receive the minimum over the whole 8 years. You're also most likely not going to receive the maximum. It's going to be somewhere in between. Let me explain how it works. They're going to link it to 10 stocks. Once again, you can never lose principal if you hold it to maturity. If the bank fails, it's FDIC insured. So let me ask you, are you okay receiving between 1.5 and 5.5 interest every year in a safe product? No, you're not. You want to potentially receive 7.25? Okay, let me show you another product that has a little bit less minimum guaranteed return but has potentially more upside. It's that simple. You show them the products, you let them choose, you answer their questions, and you move on. Finally, a couple more. We already covered the interest. How do I submit a case? We have a very simple 4-step case submission process. The reason I'm bringing this up is some of our agents have found that they can skip one or all of these steps. They're not as important. Let me just go through them real quick. You get the application filled out. If it's not completely filled out, if you're not sure, it's okay. Fax it in. Fax the application. If it's a qualified case, the incoming transfer rollover form or the rollover certification if you have a check. If it's a non-qualified case, the check, a copy of the client's ID, and then wait. Generally, we get back to you very quickly. Once in a while, myself and some others who review cases can be out of the office at lunch or at a meeting. So if you don't hear from us in 24 hours, assume that something is wrong. We didn't get your fax. We deleted it somehow. Stuff happens. Do not send it to Provident until you hear from us. If you don't hear from us, normally you send it in, we review it. We're going to send you back an email which basically says the case is approved. Send it to this address. Here's what you need to send. Or call me, we need to make a few changes, or the changes are simple, here they are, make them, send it to Provident. Once in a while, you won't hear back from us. If you don't hear back within 24 hours, call your business consultant and we will figure out what's going on. Then what you do, once you've gotten the approval, we look for suitability, we look for completeness, we look to make sure everything's in place and the Provident will accept it. Once you've gotten the approval, you overnight it to Provident, you send us a tracking number. The reason is, one, sometimes towards the end of the month, Provident is backed up. They don't report as quickly as we like about receiving apps. If I have a tracking number and I know what's in it and I can show that it got to Provident, I can trade on that without talking to them. Secondly, if you skip steps 1 or 2, sending us a tracking number will alert us that there's a case that maybe we did not see. We didn't get the fax. We never talked to the agent. We'll have somebody call you. Boom. That's it. It's that simple. You fax it in, wait for approval. If you don't hear from us, call us, send us a tracking number. Finally, we will send you back a ready-to-trade email or a transfer update when the case has gotten to Provident. All right. That's it, everybody. I went a little bit longer than I had hoped. Sorry. Questions? We're not going to take any questions today because we're recording this webinar. We're going to use it for training. Here's everybody's phone number. That's our main number at the top. I'm pointing here. And then here's all of our business consultants. And then Tim Harding, our Chief Marketing Officer. I'm going to leave this screen open. And thanks for attending and look forward to talking to you all soon.